Welcome to Stuck, Time to Improv. I'm Mary Scott with Business Riff, and I want startup businesses to be wildly successful. One way to do that is to get money from investors, and we're so lucky today. We have Brian Matthews from Cultivation Capital. So he is a major investor, and we're going to ask him all kinds of things about what he's looking for. Welcome, Brian. Thanks for coming.
Thank you, Mary. I'm excited to be here.
So you see a lot of startups. Is there one pet peeve you have when people present and it's just wrong?
No, I would say no one's wrong. And just as a little clarification, we've got a number of different industry segments within Cultivation Capital, and I'm more on the software side. So a lot of my answers will be software related as opposed to life science or ag tech related. But they usually get called through before they get to the partners. So typically when you're trying to get money from Cultivation Capital, you're going to first talk to a principal on our team. And so they usually will provide guidance on, what we're looking for if the presentation isn't exactly as we would like to see it.
Investors in general, each one has their own particular niche, right? And Cultivation Capital likes software, and what else?
Yeah, so we have four verticals today. We have ag tech, agriculture technology. We've got life science and healthcare. We have software technology, and our newest fund is a geospatial fund.
Okay. And how far along do startups need to be before they're really ready to talk to you folks?
We invest in late seed, early A companies. So on the software side, that's usually 500,000 to 2 million in revenue is kind of what we're looking at. Tech Fund 4, which is the fund we're operating out of today, writes a $2 to $3 million first check, although we have done a couple of deals lately at 1 million. So we're looking for companies that want $3 to $5 million and have a $500,000 to $2 million in revenue.
Okay. What do they typically say they're going to use that money for?
To improve the product and to grow their sales team. We look for companies that have product market fit and kind of know who their customer is and is going to use this money to increase the market spend, to add additional salespeople to accelerate their growth rate.
Okay. So tell me a little bit about you, Brian. How did you become an investor?
Wow. So I've been an investor since the late 90s, was an angel investor for many years, had successful entrepreneurial businesses in the 90s, and took some of that profit and invested it mostly in internet technology companies back then. A lot of the investments were around infrastructure, so more hosting and pipes and communications related stuff, and started going more into software in the O's. But been an angel investor since the mid to late 90s and invested in over 40 companies. So that was the start of this, and struggled to raise money in St. Louis. And so knew there was a gap and a need for capital in the St. Louis community. And so that was the impetus. And for Cultivation Capital, we started it in 2012.
Okay. And typically when you do rounds of investing, is it individual companies or do you have cohorts? And about how many companies get your investment in a year?
On average, we do around 15 companies per fund on average. Tech Fund 3 was 18. We'll be somewhere between 15 and 18. We invest in new companies for 3 years, and then years 4 and 5 are follow-on capital. We raise a new fund every 3 years. So we've always got fresh capital to invest in new companies. So on average, we do 5 or 6 new companies a year.
That sounds so cool. Are you able to talk a little bit about some of the products you've invested in so far?
Sure. So, in our first fund, Tech Fund One, our first investment we ever made was a company called Gainsight that was started by Jim Eberlin and ultimately became $1 billion company. Both us and Capital Innovators, actually Capital Innovators found them first, but when Cultivation launched in 2012, we made 2 investments in April of 2012, and that was Gainsight and Locker Dome were our first 2 investments ever. In Tech Fund 2, we had an interesting one. Deal Cloud was our first investment. Deal Cloud was out of Charlotte, and Rick Holton knew Joe Maxwell, who had, they started a fund called FinTop. And anyway, we invested in Deal Cloud and sold it in 2.5 years for a very good multiple. And it's probably our greatest IRR return that we've ever had. That was our first investment in Tech Fund 2. Also in Tech Fund 2, we had Cloudbeds, which is still operating and still within the portfolio. Although we have sold a piece of Cloudbeds twice, we still own quite a bit. And they recently raised $150 million, $100 million from SoftBank back in 2021. And so those were 2 of our notable Tech Fund 2 investments. Got a number of Tech Fund 3 that we're high on. But all in, we've got 60 companies. I think we've had 8 exits. So we're actively managing across Tech Fund 1 and Tech Fund through Tech Fund 4, about 52 companies.
Wow. So it's not just scale to sell, it's scale and into profit and hold on to it a little bit. It sounds like you guys are very successful.
All of the partners, and there's 7 partners now on Tech Fund 4, have successfully built companies. And we usually take a board seat. Almost every company we have a board seat, and we actively help to grow these companies. We look for companies that are growing at over 100% year over year, but as they scale into the tens of millions in revenue, that growth rate starts to drop into ideally the 30 to 50% year over year growth rates. That's typically a venture growth rate number. So, if we're investing at 1 to 2 million, they can pretty quickly get to 10 plus $million in revenue.
Well, this has been fascinating. I love hearing about all the great companies you've invested in and a little bit about what your process is. Is there one thing you think startups ought to know before we leave today?
If you're going to take money from a VC, it's you're in it for a long ride. We typically want to hold these investments for 5 to 7 years, and so we would prefer not a quick flip. And we would expect a commitment, a relatively long-term commitment once you take money from us. And if we say no, don't take it personally. We look at hundreds of deals a year, and like I said, only 5 or 6 usually get funded. But we've said no, and then a year later said yes. So never give up. And the other thing that's really important is ask questions when you are in the meetings, presenting to our principals or presenting to the partners. Ask questions, and we're gladly here to help you understand what we're looking for, why we decided not to invest in the business, what you need to change. I think all of that is important. We want to see you be successful, whether we invest in you or not. So please ask the questions and get our opinions. You'll get different opinions from different VCs as to why they didn't invest, but you need to take all of that information and decide for yourself the best direction to take with your company.
Well, thank you so much, Brian Matthews from Cultivation Capital. This is great information for startups. And again, I'm Mary Scott with Business Riff. The best thing you can do is book a synergy call with me at businessriff.com, because I want startups to be wildly successful. And join us again next time for Stuck Time to improv.